Good afternoon, my beautiful people. This is Michael Brown, CEO and founder of Real Estate with Michael Brown at Keller Williams NY Realty. And today we have the luxury of sitting with Travis Bowens of Homebridge, the senior loan officer. I don't know what your official title is today, Travis.
Listen, I do loans, brother. So the title doesn't matter. I help put people in homes, man. But on paper, branch manager, loan officer. But I'm just here to help people.
Perfect. And you know, you kind of segue into why I got you here. You know, you and I have had the pleasure of doing some transactions together. I've known you for a very long time, just a stand-up gentleman in the mortgage industry. And today's topic is about mortgages, and it's about interest rates. And you know what I want to cover today in today's session is if you could explain interest rate and how it affects the buying power and the buying process. I know we're in a weird space now. You and I were just talking about this a few days ago, that rates are going to go up. So what does that mean to the borrower, and how can we position them to win?
All right. So yeah, you're absolutely right. And as you mentioned, interest rates have been trending upward. And I like to say right now, they're seesawing, going back and forth, struggling to find its footing. But ultimately, we believe that it is going to be trending upward and higher. When that is going to officially happen, we don't have that crystal ball.
Right.
But one of the things that I'm trying to share with potential buyers in the marketplace is that correlation that as interest rates rise, your principal and interest payments will go higher.
Right.
And what that results in for most people is less purchasing power.
And what you just said kind of leads me into the first question. What happens when rates change? We know they're going to change. So you kind of hit it on the head. It's going to affect your purchasing power.
And it's happening right now. So rates are up from where they were just even a month ago. And what's happening is I am actually going through and calling my clients to adjust their pre-approvals. And we are actually, not taking into account where rates are right now. See, last year rates were going down, right? So if I gave a pre-approval to somebody and they had, let's say 2.75 or 2.5% interest rate, we felt pretty confident that's where they were going to end up even a month or two from that time frame when we started the process. So now we're adjusting that, meaning I'm pre-approving people with a higher interest rate than where they are right now to take into account if rates go higher, to make sure that they can still afford the home and they aren't putting in offers based on an older pre-approval, right?
Right.
And so,
based on last year's interest or last month's interest rates. And like you said, the volatility, things change month to month.
Absolutely. So, so what I tell people is that especially if you're on a budget, if you've budgeted X amount of dollars and you say, hey, my principal and interest payments, the most I want to pay is $1,500, $1,600 a month for my principal and interest. If interest rates go up, then obviously that budget is going to go out the window depending on how high interest rates go.
How much it jumps, right? So you're going to get affected, right?
Right. And so then, as we mentioned before, your purchase, if you want to keep that same principal and interest payment, you now have to look for a lower price point. But here's a conundrum, as you know, in the marketplace. Even though interest rates right now may be going up, prices have not started to come down.
Right.
And
we haven't seen that correlation yet. It hasn't trickled down.
Right. And because of low inventory, that still may not happen. Right. And so if
good point.
As an agent, right, as a realtor, you have to deal with the emotional side, right? Because purchasing a home is, for most of us, an emotional experience.
Yeah.
Right. And so now, and I may be, jumping somewhere else, but now you still have to contend with, well, here's what the asking price is. I may not even be able to get in for the asking price. Do I offer more? Right? Which again, at that point, may also put you outside of your budget.
And it's you kind of just made me think about something as well. I have an accepted offer on a condo. We have the inspections today. I don't represent the buyer, but just talking from a buyer perspective, they have a pre-approval that says the payments are going to be X today. By the time we close 60 days from now, that payment can be very different.
Absolutely, you're absolutely right. And so
Wow.
that's where the communication
Communicate, absolutely.
really becomes key, not only between the buyer and the loan officer, but the real estate professionals such as yourself,
Right.
just to make sure that everything that we've within the bandwidth that we have considered everything to make sure that the transaction ultimately will close, because that's the end game, right? The buyer isn't the buyer comes to us for a pre-approval, but we aren't in the pre-approval business. We're in the closing business.
That's right. That's right.
So ultimately, we need to make sure that the buyer is going to be able to achieve their ultimate goal of home ownership, right? And closing on the property.
And depending on if they have a lease they got to move out or something they're navigating, there's a whole trickle down of things that could happen if this doesn't happen.
Absolutely. Right? Absolutely.
Now you mentioned a lot about how it affects the buyer. How does interest rates going up affect the seller?
Well, it's interesting, right? Because we have this dynamic right now of low inventory. Right. But the low inventory aside, generally speaking, if interest rates rise and the purchasing power starts coming down, that could affect the number of buyers who can be approved for certain home prices, right? So you can get affected in the jumbo world, you can get affected in, the non-jumbo world, the high balance world, all across the spectrum, right? You may have less borrowers who qualify. I think we forget, because we've had interest rates so low for quite some time now, that interest rates have been kept artificially low in order to spur growth. And so because of low interest rates, more buyers are qualifying for homes that they otherwise may not be qualified for, right? I had a conversation this morning with a young lady who has a very specific budget. She's moving in with her mom. Her mom is on fixed income. They have a very specific budget. They can't go above a certain price point and taxes, right?
Right.
And of course,
that's the kicker here where we are, the tax.
That's the kicker where we are. So they have to look in a very specific area or price point because of the taxes. So I had a conversation with her this morning, letting her know that what's going on in the market, and she needs to take that in account, right? As she's looking, so that she isn't caught by surprise down the line, right? So we had a very good conversation. So sellers just have to understand at some point in time, this isn't going to be, this isn't going to last forever.
This isn't normal.
Right.
This perfect storm of low interest rates, low inventory, bidding wars, that's just not, it's not normal. And it won't be sustainable long term.
Of course, this thing we might have heard of, the pandemic.
Oh yeah, that thing.
As we're in, Westchester, and as we know, there are a lot of people coming up from the city, Manhattan and other areas, Queens, Brooklyn, who have these higher rents and can afford to bid up the prices and pay because they're still paying less, right? So this isn't a normal market that we're in. And at some point there is going to be that
something that I probably haven't. You said it, and you just said something I didn't really think about, give much thought, is when we have people moving up from the city, their rents, for a 1 or 2 bedroom apartment is equivalent to a 900 or $1 million mortgage.
Right.
So that is probably what's swaying. Like, I didn't think about that, but that's probably what's swaying a lot of the bidding wars, because they're like, you know what, I can afford 7,500 a month, or I can afford $8,000 a month, or I can afford $9,000 a month. I think people often, when we think about house prices, we're just buying a monthly payment. You know, you're not buying a house for $1 million. You're buying a house, unless you're buying it cash, but you're buying the monthly payment associated with that $1 million house.
Right. And you just mentioned something, Mike, cash. I try to tell my buyers, don't go out here trying to compete with a cash buyer. A cash buyer is basically eschewing the mortgage process. They are choosing to go outside. So they don't necessarily care about an appraisal. So if they pay cash and they overbid, that's something that they're spending. The bank can't say no. So I try to explain to the buyers, hey, listen, when you're going through the mortgage process, and I know that as a realtor, there are options, right, to bid above, right? But now I'm starting to see a lot of contracts that are stating in the contract that if it appraise, that the buyer now is responsible for covering the difference.
Wow. So
you're trying to compete with a cash buyer. And then the calls I get are, what if it doesn't appraise? Well, according to your contract. And so, you know, because people have X amount of dollars if they don't have cash. They have X amount of dollars by which to compete. So it's very hard to compete. So I just threw that out there because, you know, people are trying to compete with the cash buyers, and it's very difficult to try and compete and beat a cash buyer.
Yeah. And for the prime reason you said, they are the bank. If they overspent, they overspent. There's no ramification for doing that, unless in their heart they feel bad about it later, you know?
Right.
No, you were spot on. What else do you think is important about this interest rate conversation that we need to mention today?
Well, listen, what's really important is, while interest rates are important, it's not the most important piece aside from what you want to pay. Like, a lot of people call and they say, well, what's my interest rate? Right? You have to make sure that you're getting the right program, and what your needs are, because the needs of everyone are not the same, right? Everyone may not need a 30-year fix. And while interest rates are low, I was working with someone in the health field. They're actually a doctor. They're flying in from somewhere else across the country. They're going to be here 7 to 10 years.
Right. 30-year fix does not meet their needs.
For them to have a 30-year fix. They've got a set contract. And so we're working around that particular contract, and then they plan on going back out to the West Coast, and they're pretty confident that that's what's going to happen. So we're not looking at a 30-year fix. So interest rates in of itself and in vacuum is a good question to ask. And I'm not saying not to ask that question, but a lot of people lead with that question as a filler because they just aren't sure of what to ask. And you want to make sure
important questions, right?
Right. You want to make sure that the person that is going to be overseeing from a financial standpoint, the largest transaction that you're going to most likely make in your entire lifetime. I joke with people all the time, say, hey, do you know anyone that's got a $350,000 chain or necklace around their neck? Do you know anyone that's driving a $350,000 car? And I don't know.
Most people,
really said, yeah, I've got someone, my friend, or my cousin. It just doesn't.
Unless you know Lil Wayne or something like that, right?
Right, and 350 is probably puny at that point. But, I joke around with them just to kind of get them to think. And they're like, well, this is a real big deal. So you really want to make sure, most importantly, that you are aligned with the right person who is going to look out for your needs, not their needs, but as a buyer, what your needs are, and really dig deep and figure out what those needs are. Because sometimes the buyers don't even know what their needs are yet. And so you have to really investigate and figure that out. So that's very, very important. But I would just say interest rates is something that you do have to watch in terms of where your payments are. As you said before, you're buying a payment, you're actually getting into something, and set a budget for yourself. You have to know what your budgets are. And as you go through the process, you're going to figure out what's realistic and what's not realistic. And what do I mean by that? I'm sure, and I know we have probably worked on a couple ourselves, Mike, where a person may say, you know, I only want to spend X.
Right. They're pre-approved to $1 million, but I want to spend 600,000 or whatever
Right.
that number is.
Right.
Yeah.
And then as they start looking, they realize that that may not be an attainable goal based on what they want.
That's very true.
Right?
That is very true. We've had that happen with us before. Absolutely.
Right.
Because I think people have, you know, as much as we think people don't have good memories, I think people do have good memories, and they don't want to put themselves in a cash poor or house poor situation. They still want to take their trips. I think this COVID pandemic has, I think you said something about people just want to keep their cash on hand. So maybe pre-COVID, people would have spent all their money to get into this home. And now they're like, no, you know, let's be a bit more cautious and do this the right way.
Absolutely.
Yeah. I have a borrower right now, or a buyer. They're looking at half of what they're pre-approved for.
Right. And
of course, I always try to get them to, you know.
how long have you been going out with them?
A little too long. All right. That's a whole nother stuff. But that goes back to the conversation, like what you said. Is that budget realistic for what I want to get?
Right.
Right. Like if I want a 3-bedroom, 2-bath, 3-story townhouse, is this budget realistically going to get me that? Or am I just going to be fighting with people to try to get a deal?
Right. Right. And I think as professionals, right. And this is where I say the communication becomes even more important.
Yeah.
Because from a financial standpoint, if I'm having some of the same conversations that my realtor partners are, I think it becomes for the potential buyer and borrower, it becomes like, you know, Mike is sharing this with me, Travis is sharing with me, I'm turning on the news, I'm hearing this. Maybe there is something to this. Maybe I need to ask a different set of questions to figure it out.
I would totally agree with you on that, 100%.
Right, because conversely, we have the buyers who want 4 bedrooms, 2 baths, and they want to spend $300,000, and then they want to stay within 30 minutes of New York City. And I'm like, well, I don't know if that's possible. You got to speak to Mike. But from what I see, I don't know if that's possible. And they're still looking, and then they will start looking for what happens. They'll start going in different directions. Well, what about a fixer-upper? And these questions. So I think if we do, and because I share to people, this is a relationship. As much as we talk about interest rates and products and programs, this is about relationships and trust.
Yeah.
And if you trust in the process and you trust in the people that are trying to get you to your goal, and you actually listen, and we provide information, right? Real information and facts, right? And we provide these facts. I think we can kind of shorten the process a little bit for some people that they can come to the realization a little bit earlier that they might be searching for something that is virtually non-existent in the particular markets they might want to enter.
That's right. And I think you hit it on the head. You have to help people have self-discovery about it. You can, if you tell them there's nothing available for 300, and I tell them there's not, what do people do? They keep looking, right? There's got to be something. But I think if you help them have self-discovery around, this is the budget, this is what's available doesn't really meet my needs, I'm going to have to either A, move further out from the city, or increase my budget in some way, somehow, maybe a cosign, or maybe just pull up some extra cash, go into the 401k. Absolutely.
Absolutely.
Yeah. No, you were spot on. And the whole purpose of this conversation today around interest rates is that they are going to go up. And, I just want to make sure that people are aware of what happens when that does happen.
Right.
And then they can make informed decisions on how to prepare themselves for that.
I think what happens, Mike, is that we sometimes get lulled into a false sense of security. Interest rates are always going to be here. And we forget, that at one time, average rates were between 10 and 16%. When my parents were out looking, it was like between 10 and 16%. And at that time, people probably thought that was where rates were going to be. And that was it.
Forever. Right.
Forever.
I'm going to just pay 10%. That's what it is.
Right. And so here we are. So we're not going to, this is unprecedented times, as you said, and there are so many different things that kind of happen to create this perfect storm, if you will. But the market does want rates to go up. That's what's happening right now. The market wants rates to go up, and they will go up eventually. So we just have to make sure that, as we're doing today, and I'm so grateful to be here with you, talking about this topic, because I'm very passionate about making sure people understand, buyers, agents, other professionals who may be coaching, tax planners, whatever. Hey, listen, this isn't going to last forever. We really need to take a step back and evaluate our position and see where we want to go from here, so that, again, our needs as buyers are going to be met.
That's right. You said it. No, and thank you for your time. I know you're super swamped and busy, so I thank you for taking the time out to jump on this video with us today and just give us some insight. It's good to know from the individual professionals. Anytime people ask me mortgage information, I give them a sprinkle and I say, but you probably should really talk to the mortgage professional, right?
Absolutely. Absolutely.
Just like you don't want to ask me about carpenter stuff. It's just not what I do, right? Like
Right.
I know how to hammer a nail into it, but that's, the grain of the wood is not my thing, right?
Absolutely. Absolutely.
So,
and it's so, listen, what's really interesting is people, when you have a working relationship, people feel the synergy, and they feel the partnership, and they feel that, what, these my team that's working with, they really want the best for me, right? Because that's what we want, the best for everyone. But we can only deliver the best to everyone for people who have formed that working partnership with us, so that we can get them across the finish line, right? And so I think partnership and having these discussions are really part and parcel to not only us honing our craft and getting better, but making sure that we can provide the greatest experience that we can for our customers.
You hit it on the head. Damn, you're good, Travis. But it's all about the experience, because they remember the bad experiences, unfortunately, more than the good experience. And things are going to happen, right? There are going to be hiccups. Something may be wrong with the property that are outside of the control of our hands. But it's how we handle it and how we communicate. And you just said everything. Communication is so key. Over communicate what's happening. One of my sellers, they're like, I talk to you a lot. I'm like, it's all right. It's important that we communicate often, because look, you want to relocate and get out of the state. I want to make sure that you are positioned, and we're doing everything we can to make sure that you hit your timeline. Again, it's not about me making a commission. And I think as we get better at this business, I think people see that in us, and they know it's not just about a commission for us. It's about really giving them the guidance so that they can feel great about the decision they made.
Right. Well, listen, to that point, you just made me think about something, right? So I referred a gentleman to you that started out in New York, and then they decided to look next door in New Jersey.
Okay.
And you had referred them to a partner in New Jersey, and whatever happened, they decided not to use that partner. They went to someone else. And then I didn't even have to say anything. They reached back out to you, right? To say, hey, listen, we need somebody, right? Okay. They would have never done that if they didn't feel that I made a good referral, that I
Right.
had their best
So
interest
true.
at heart, and
Yeah.
B, that after they spoke with you, that they felt that they could come back to you and say, hey, Mike, here's what happened, but we want your referral. And that itself, to me,
Yep.
is huge and a testimony to the work that we put in to make sure that people feel the energy of what we're looking to do on their behalf.
So true. I didn't even think about that, but it is so true that he honestly felt the most, and he's had other realtors, right? I'm not the first,
Right.
because he's all over. He's Pennsylvania, there,
Right.
everywhere. And, you know, I think the rapport that you and I have with him did help that a lot. So thank you. Thank you.
Absolutely.
I really appreciate it. And that's a great way to close this session, right? You know, interest rates are going to increase. I think just to wrap up what you said, they're not going to stay like this forever. And we're not saying that to push you off the fence, Mr. Buyer or Mr. Seller, but just to be real. Like if you're thinking about making a purchase, you and I had this conversation last week. $1,900 for a $700,000 mortgage. You buy a house right now, right?
Right.
You know, if you
I'll take it.
right. If you have the wherewithal and you got your savings and you know where you want to live and you got that narrowed down, pull the trigger, because it will never be this cheap again, or it'll be another 10, 15 or some other cycle before we see it this cheap again. So definitely take advantage of it. So Travis, I want to thank you for your time today and really giving the jewels to our people here, and just giving some guidance on what to do when interest rates do increase, as we know they are.
Awesome. My pleasure, Mike. Always a pleasure. Thank you.
Perfect.